Ladies and gentlemen, I'd like to welcome you to yet another weekly investor forum. Our special guest for this evening is none other than Mr. Christopher Levy, Group President and Chief Executive Officer of the iconic Jamaica Broilers Group Limited. We encourage our viewers to post their questions on social media and remember to tag us with the hashtag #MILInvestorForum. If you enjoyed this program, be sure to like, share, and subscribe to our YouTube channel. We'll also be featuring a market segment on foreign exchange, so be sure to stick around until the end of the program. Jamaica Broilers Group Limited is a publicly listed company on the Jamaica Stock Exchange and was founded in 1958. The company operates with a global marketplace through subsidiaries located in 3 countries, Jamaica, the US, and Haiti. Chicken is a core agribusiness, and JBG operates in every stage from hatching eggs to ready-to-eat offerings. The company's brands include the Best Dressed Chicken, USA, Reggae Jammin', Hamilton Smokehouse, Wincorp International, Jamaica Egg Services, Le Chic Poulet, International Poultry Breeders, High Pro, and ZEPM. Operations in Jamaica are governed under 2 primary divisions, the Best Dressed Chicken and High Pro. Due to the chicken shortage in August 2020, the company expanded its operations in Jamaica. Jamaica Broilers Group achieved the significant milestone of becoming a producer of poultry meat in the United States of America. The Best Dressed Chicken USA processing plant was acquired in September 2019 in South Carolina. The company expanded its presence in the U.S. on August 27, 2020, with yet another acquisition, this time of a feed mill in Georgia. I take this moment to remind you that if you're seeking to expand your portfolio or embark on your first investment journey, Mayberry Investments can guide you in achieving your financial goals. Follow us on social media and visit our website at www.mayberryinv.com to learn more. Our social media handles should pop up somewhere on the screen. Now let's introduce our special guest for this evening. As I mentioned before, it's none other than Mr. Christopher Levy.
Hi Dan, how are you doing? Good to see you.
Hey Chris, it's great to see you. I'd also like to welcome online our chairman, Gary Parrott, our chairman, Christopher Berry, and our CEO, Gary Parrott. You got a promotion there, Gary. Excellent. And as we continue with the program, let's go into the company overview. And we have an overview of JBG, courtesy of our financial analysts at Mayberry, and I'm going to walk us through that. So first up, we mentioned JBG trades on the Jamaica Stock Exchange. It's a company that was incorporated in 1958. In the last 2 years, the stock has traded, currently trading at $34.99. It's traded at a high of 36 and a low of 23. Today, at approximately $34.99, that represents a PE ratio of about 14 times. In a market where I like to think of the main market average P as being about 16 times. So it's obviously a stock that's done well in recent times and a good one to look at. Moving to the next slide. I'd like to highlight the performance for the last 9 months, the fact that they've been able to grow their operating revenues by 2%, grow their gross profit by 3% to $10.3 billion, retain their distribution costs by 6%, and when you put that all together, including a 33% or $200 million reduction in finance costs, you get a 66% growth in the profit before tax. That's $2.5 billion in the last 9 months. I mean, absolutely impressive. That translates into, for the 9-month period, an earnings per share of $1.50, shareholders' equity of $18.10 billion, and total assets of $47 billion. Moving on to the next slide, I'd like to highlight the fact that, as we mentioned, they really do operate in 3 main regions. And so here's an attempt to show the breakout of sales between the regions, with $26 billion coming from Jamaica, and segment results or profits of $3.1 billion. From the U.S., they had total sales of about $16.8 billion, which represents about 38% of their revenues, and segment results of about $1.1 billion, i.e. a profit. And in Haiti, which is the smallest part of the operations, sales of $1.7 billion, and we'll be talking about them struggling a little bit in Haiti, roughly breaking even, quite frankly, but they've had their challenges, and I'm sure Mr. Levy will expand on that. Last slide, I'd like to show the quarterly performance of Broilers, and you will see in the last 4 quarters, going back to fourth quarter 2020, how they had some challenges there, but ever since then, you can see how the profitability has just been growing and growing and growing. So obviously, they found a secret to unlock the profitability of the business, and I'm sure we'll be talking about that. So our guest, Christopher Levy, I'd like to just introduce him and give you a little bit background on Christopher Levy. So Christopher Levy has been highly regarded as an astute corporate leader in the industry. Since assuming the role of Group President and CEO in 2009, the group has acquired several significant assets, including in the U.S., and it completed its group's vertical integration there too, as we mentioned, with the acquisition of the food mills. Under his leadership, the company has expanded its business in Haiti in 2010, and we saw how the operations there moved into profitability by 2017. This year, he was appointed as chairman of the Jamaica Special Economic Zone. He also serves as a director of the Jamaica Broilers Group Foundation, Caribbean Poultry Association, and the Swallowfield Chapel Outreach Foundation, Morelands Camp, Stony Brook University in New York, USA, and the Global Orphan Project in Haiti, just to name a few. There's more, I assure you. Christopher Levy holds a Bachelor of Science degree in Business Management from the University of Miami, go UM, as well as a Master's of Business Administration from Regent University in Virginia. He's also successfully completed his executive management program at the Harvard Business School. So today he'll be giving us an investor briefing on Jamaica Broilers Group. And once again, I'd like to welcome Mr. Christopher Levy. Welcome again, Chris.
Thanks, Dan. Good to see you.
Great. And I would like to jump into a few questions, but before I do have to acknowledge your chairman, Chris, your dad, Robert Levy, for the great work he's done and the amazing board that you have over at Jamaica Broilers. I'm afraid to start naming names because I'm going to get myself in trouble. I've worked with them. I've sat on other boards with them, but you have a great team, including your director emeritus, Danny Williams, who I can't help but mention, and others, of course. Now I'm getting myself into trouble. Ian Prasad, Greg Shirley, Omar Azan, Senator Auburn Hill. It's a great lineup, Chris. It's a great look. Welcome again.
Thank you very much. Thank you very much. Yes, we do have a great board, and I think that it's amazing to be able to sit with the collective experience of those folks and just kind of almost just kind of absorb it, you know. So it's a lot of fun.
Well, it must explain why profits are up 66%. So first question to you, Chris. For the 9 months ended January 2021, the Haitian operations reported a segment loss. However, you continue to increase your shareholding in Haiti. Can you tell us why that is?
Yeah, what happened is that was part of a shareholders agreement that was in place that we had to execute on. We recognize maybe that the timing on it isn't the best, but we do know that it was something that we had to do as a company, and basically we decided to execute it earlier in the year, knowing all that was in place. So it wasn't that we feel that we're taking out the other shareholders or anything like that.
Great. Now, the Haitian business, Chris, does about 7% of your sales, but when I think of Haiti, I think of a country that's 4 times bigger than Jamaica. I mean, how do you envision that business growing over the next 3 to 5 years? What's the growth potential there, and how should we think of it?
Yeah, I think, Dan, Haiti is in a very difficult spot. There is the economic turmoil that's there is a result of what I'd almost call the social turmoil and the social lack of structure in the country and the lack of a proper economic base. So I think Haiti is in a very difficult spot right now. I'm not projecting. I don't see a major needle mover for us. It's more about a containment strategy right now. There is opportunities, but when we weigh where we would be putting capital, no. I don't think Haiti would rank high on that at this point in time. Things can change.
Yeah.
Elections are in a year, if I'm not mistaken. And it will take time. The conditions there are so difficult that it is going to be on people's radar, other countries' radar. So, like I said, it's more around a containment strategy more than an expansion strategy.
Excellent. That makes good sense. Notably, the decline in tourism affected the group's performance. How optimistic are you about the recovery of the travel and tourism industry this year?
That's a big question. I think, Dan, that I think every company has been impacted by the loss of the tourism sector in one way or the other, and the whole travel industry. There's a lot that hinges on its recovery, from vaccinations right back to the willingness of people to travel again. There is a great desire for folks to travel, but then there is this offsetting hurdle that just keeps changing. And the challenge that's faced is just how fast can this recover in terms of little Jamaica. We compete globally with tourism, and whilst I do feel that there is a tremendous brand, I think that we've got to recognize how important it is to protect that brand and make ourselves available and accessible to people. We can't make it difficult, we need to make it easy.
I appreciate that. And while obviously you've been impacted to some extent, the main point is, again, year over year, you still grew sales by 2%, and more important, grew profitability by 66%. So that's quite commendable. Gary, over to you. I'm sure you must have a question for our farmer, Mass Chris.
Well, I don't see him as a farmer, you know. I mean, with all due respect, love Chris to death. Chris, one of the things, Chris is a very humble guy. But Chris hasn't realized that he has turned around a corporate company in under 4 months. I remember when Chris was on the show last, he was speaking about the effects of COVID. He actually introduced, this is how great Chris Levy is. Chris Levy introduced the discussion about the effect of the curfews. And everybody has got caught up in that and forgot that Chris introduced it. And to his credit, I think the country has benefited because I think the government moved towards increasing the curfews, etc. But more importantly, as I said, I think the credit that's due to Chris is that when we had him first, he was talking about the impact of the pandemic, etc., and what he had to do. And Chris is one of probably less than 0.001% of CEOs in the world during COVID that it impacted them negatively. And he and his team has found a way to now be one of the biggest beneficiaries of COVID. And to that, enough respect, Chris, big up.
Great team, great board, Dan.
As I said, Dan, I'll send Chris the invoice. But my question, Chris, which is a question that I actually got about 4 or 5 people asking me this question. Broilers seems to have rebounded from the initial COVID impact, as seen by the profits that you have generated. But people are now complaining about why is the price of chicken increasing, even though you are seeing significant profits.
Yeah, I think there are a couple of things to bear in mind here, gentlemen. The first of all is that Jamaica and what I call producers like us are price takers. It doesn't matter if you're a Tyson or if you're little Jamaica Broilers, as it relates to corn and soya and some of those logistical costs, availability costs that have come into play. So what we've seen is a run-up in corn and soy, the 2 main ingredients that we use, to somewhere like about 7-year highs. And that is a straight pass-through in the price of everything that uses it. Bread, obviously chicken, anything that's using those products is just going through the roof. I think that there is a very broad challenge facing the world in terms of availability of not only just raw materials, but in terms of just the logistical capacity to get things done. And some of that is coming out of what people like to say is COVID protocols, but it is hamstringing the world economy in a way because people cannot get goods that they want. And you have to remember, America is one of the largest consuming economies in the world, and they're pumping trillions of dollars into the economy. So from the consumer's point of view, they're not getting hammered financially. So they want to consume, and the goods aren't there because of whether it's some sort of break in the supply chain, or whether it's just unavailability of labor because the plant is short or reduced capacity for COVID protocols or some sort of outbreak. So right now, in terms of the cost of chicken, it's moving up aggressively. But I tell you, there's a basic principle here that we use, and it's in world commodities. You know, the cure for high prices is high prices. And because what happens is when you have corn and soy at these levels, the planting just goes crazy. And investors move in and investors move out. So I think it's a cycle that we need to recognize we're through. Yes, there's some volatility in play. It has become very geopolitical as well in terms of the relationship between the US and China. But I do feel that as this year rolls out, hopefully we see a peaking and a softening. The market softened a little bit over this week. But there again, that's on a very short-term basis. The overall trend has just been north.
Thanks for that, Chris. And it really seems to me like you've cracked the COVID code, as Gary said, and one of the keys to you increasing your profitability is that 6% reduction in distribution costs. Is that something you can expand on a little bit? I mean, how did you manage to reduce your distribution costs while increasing sales at the same time?
I think, Dan, what happened is, and you mentioned it in your opening statements, was if you look at our last quarter of last year, quarter 4 of last financial year, there was a significant dip there. That when we saw COVID breaking, we knew we'd have to restructure the organization. So we really rushed hard and worked with the team and the board, and everybody pulled together. And we tried to get as much of those restructuring costs into that last year. And I think we did well on that, and that gave us a clean run this year. I think that to get out some of those, it forced us to look at doing business different. It forced us to communicate different. It forced us to really look at the structure of the organization. And I think we're seeing the benefits of that this year. The corn one, we haven't figured out the corn one just yet, but we're working on it.
I'm sure you will. Chairman Berry, I know you must be itching to ask Chris a question.
Yes, so Chris,
Sure.
Every time I talk about Jamaica broilers, I get the statement from people, hey, this is a protected business and the duties on imported chicken are so high and it's cheaper to import the chicken from the US than growing it in Jamaica. Can you give me a sense for, how does Jamaica look importing all that chicken versus having a local industry? What are the benefits, local benefits? What type of jobs we're talking about? What kind of GDP? Give me some arguments that would run counter to this thinking. Not to say I'm supporting it. I personally feel that, we need to produce more in Jamaica, but some people feel if it's cheaper, we should just import it. Tell me about that.
I'll give you a couple of bullet points, but I'm also going to give you a great example of the outworking of that strategy and what it's a very close country in which we've invested called Haiti. Haiti had a poultry industry, it had a very good agricultural industry, and including rice production, exported mangoes, exported tomato paste, a lot of rural agriculture in that regard. And they opened up everything to 5% across the board. What you find happening is that rural agriculture, rural employment, rural work goes, everything flows to the city, and you're into a downward spiral that is not, doesn't work well in any country that has been tried, kind of like socialism. The thing is, in terms of Jamaica, what you find is that our employment in the industry alone is pushing close to 150,000 between the formal producers and the small farmers. So you're talking 150,000 people basically directly employed. And the opening up of the markets is going to remove them off the map. Second bullet is that you're looking at a situation, if you do the math, what you find is you'll actually spend more foreign exchange importing poultry meat than you do importing corn and soy. And the opportunity for that is saying, okay, we're getting cheaper meat, but now we have to find more foreign exchange, which puts more pressure on the dollar, and that spiral starts. So you have a situation where you've got to recognize the value of a industry to a nation is not always just what you see on the face. There's a lot behind it, including from tax revenues right back up to what I'd call rural employment. So those are a couple of bullet points. Keep it short.
Thanks for that, Chris. I absolutely agree with you. And by the way, what I love about Broilers, it's a publicly listed company owned by Jamaican people. And so there are foreign investors who are earning from the profits of that business that stays here in Jamaica. Those jobs you talked about, multiply that by 4 to get the number of families that are impacted. And get this, it's going to take me to my next question. 38% of your sales now come from the United States of America. So you're starting to import profits to Jamaica, which is a great move in terms of balance of payments. Next question for you. How do you envision that developing over the next 3 to 5 years? Today you're earning more than 38% of your revenues abroad. What are your thoughts and ambitions in terms of, are you going to keep growing that? Do you have any targets as a CEO?
Well, yeah, obviously we have targets as an organization, and I'll share those in a different time. But I think, Dan, that when you look at the US market, you're talking a market of 330, 340 million people. So it's the opportunities in the US, while it's significant to a small company like Jamaica Broilers, what you find here is that the opportunity to grow in Jamaica is limited for a company like ours. So the point is that growth in the US will be needle-moving growth for us. Growth in Jamaica is going to be a lot more what I'd call cash cow growth. How do we reduce costs? How do we increase the cash flow of the business? How do we continue to train staff and cross-train staff and allow them to grow and develop? And then how do we translate technology that we learn from the US into Jamaica to make us better? Everything from feed that we've really worked on lately with the move to antibiotic-free birds, and the opportunities to grow for the business are going to be a lot more focused in the US for needle-moving growth. But that's not the only thing that grows in a company. The culture has to grow, the people have to grow, the influence has to grow, and so does our overall, what I'd call, impact on the economies and communities in which we live and work. So it's not just a numbers game in this regard. There is a lot more in play than just where the actual dollar value growth is. So it's important to us that all of those factors are considered and taken into consideration.
Yeah, that makes great sense. And also, Chris, with your move to buy the mill, your second acquisition in the U.S., I mean, that's obviously very strategic in terms of backward integration. how can I think about that? Is that business supporting Jamaica as well as supporting the other U.S. business? How did you think of that second acquisition, and how do you see it adding value to the business?
The way the business is structured is that you're going to start. We're in the fertile egg business for many years, and from there you move into hatcheries. So now you're producing the baby chick. Then you realize that you've got one of the risks of competition is feed, because now you're using a lot more feed. So the challenge is to find a feed mill that works for you in the communities and the environments in which you're producing chicken, because it reduces the risk to the organization. Once you've done that, the next step is into the meat business. So that's been the progression over the last 4 or 5 years. And I think that model will continue in its outgoing.
It's a great strategy, quite frankly. Gary, what about you? Any further questions for Chris?
Yeah, the big question I have for Chris, I mean, when I looked at his numbers that you put up, Dan, every company just dreams to have the movements that Chris is benefiting from, you know. Finance costs, 500 million last year, 300 million this year, down. Revenues up, cost of sales down. I mean, this is like utopian, right? But more importantly, when I analyze your numbers, Chris, you're generating a significant amount of cash. Whilst everybody is afraid in a pandemic, people who are generating cash have a significant one-time opportunity. What type of acquisitions do you see out there, whether in Jamaica or in the US or where else in the world, that you can put this cash to use and double or triple your profits in 2 to 3 years?
I tell you, Gary, there's a saying that grain traders have, you know, that you're fortunate enough to buy grain at the low once, and you're fortunate enough to sell it at the peak once, and if you achieve that as a grain trader, you've really made your career. In terms of Jamaica Broilers and our cash, yes, it's been a good year, and we're excited about this year coming. Opportunities for us in the US have to be very strategic. And a lot of things in the meat business, a lot of things come into play. One is around logistics. America is big. It's not like you're going to just roll chicken to Montego Bay. So you have to think where your customer base is now, which customers want to grow. So one of our customers, it has over 300 supermarkets, and that's a small supermarket chain. Publix, by reference, has like 13,000 stores. Wow. So you now have to think, all right, which area do our customers want to grow in? Which region is growing for them, because that's where they're going to want product. So you have to work very carefully with your customers and what products do they want to grow, what size birds. You have to get back into farmers. Can we get the right amount of farmers? And all of these sort of things come into play. So when you move from just selling a product in a container lot to a B2B business, we moved to a B2C business up in the US, and that has driven different decisions in terms of strategy and in terms of investments. Do I think that Jamaica will continue to grow? I think Jamaica is going to have a very good year. I think we can be very excited about going forward. I think that the opportunities in Jamaica, as I mentioned, are really around cash generation, cost containment, building the brand, moving the product up that quality scale, and allowing our people to grow and develop and feel proud of what they do. I think that the US operations are a lot more entrepreneurial, and I feel that we have an opportunity in the US to continue growth there that is going to be not only exciting, but it will be, it's like a building block. It's you're building pieces together. And I think that as we unfold over the next 3, 4, 5 years, it can be very exciting. Because you have to remember, our planning has to be that far out. You know, it's not, okay, what are we doing next month? Although sometimes that does happen. And that's where the board comes in, and they're great.
Thanks for that, Chris. Appreciate that. Previously, you mentioned that small farmers represent 30% of the production in Jamaica. Do you think enough is being done to help them transition during this difficult time?
Let me tell you, a small farmer is, first of all, something like 70% of those small farmers are women. And of that 70%, about 50 have what I call a secondary job. Whether it's their hairdresser or whether they're in a supermarket or they're doing something. Obviously, all have children. And what you find is that they are very spread out across Jamaica. They're very opportunistic. So the space has to be there for them. And what you find is that they will platform from that business. So in other words, it's a great way to supplement their income. They produce chicken really cost effective. And what they will do is that will grow to a size where they will move into another, let's call it career, for lack of a better word. But the challenge that you face with them is that if the market isn't good, they're out. They'll be out in 6 weeks and then they're not there. Where it hammers them is when the market gets long and they don't have outlets for the chicken and their products and that sort of thing. And I think we're in that space right now where the market is a little long. Although the signals are positive coming into summer, that they will have a good run at it now. But I think, let me tell you, Dan, they're an integral part of the industry. And the ministry and the government understands the role that they play and just how important they are to the structure and fabric of the Jamaican economy.
Appreciate that. JPG recently made the decision to reduce the use of antibiotics in its agricultural production. What message are you hoping this will send to the wider public?
Well, I think what it does, a couple of things. I mean, it definitely moves the product up the quality scale. It's a testimony also to the amazing farming community that we have as part of our organization. And the challenge that was put before them was how to achieve this without increasing costs. And we've been working on it for a couple of years. We have a great set of folks that have assembled around it, and we've got it done. The product itself is, there's a lot of science around the use of antibiotics in animals and how it reduces resistance in humans. So it's on that basis, because we said, which side would we rather err on? And I would rather err on the side that says, listen, we don't use antibiotics in our birds at all. So that was what I thought was the initiating effort. And the folks have just run with it again, and great product.
Much appreciated. And last one for me, tell us more about the major investment you made towards the expansion of the loading bay. What
has happened is that we've really recognized a couple of things. Back in the day, you could deliver chicken in much larger trucks that would make 15 and 20 stops for the day. That's not going to happen. No, there's just too much traffic. The road logistics aren't there. The network is not there. It's clogged a lot of times. And supermarkets want to keep less in inventory and get more regular deliveries. So you move into smaller trucks that are a lot more agile. You still have long runs to Montego Bay with the containers and stuff like that. But around what you call your urban centers, you need smaller trucks that can get in and out. They're doing fewer deliveries. They're turning it quicker. So they'll do two loads from the plant in a day. Now, when you do that math, you realize that the number of loading bays that we have, we needed more. So we actually doubled our capacity there in an effort to just keep this thing turning and moving and making it a better experience for our customers. So a lot of our customers get a delivery every day, and some get twice a day. And what you find with that, it really works for them. The product is fresher on the shelves. The product looks better. They're able to respond to consumer changes quicker. If there's a run on wings or legs or whatever, there's a response time is shorter. And it really is driven about making it a better experience for our customers.
Sure. And Chairman Berry, I'm sure you'll have one final question that you'd like to ask Chris.
Sure. So, tell us about what type of, if you had to say, you know, the market's going to grow by X amount this year, what would that be? What do you think it's going to be?
Which markets you're talking? Stock markets, chicken markets?
Jamaican chicken meat market.
I think if, and it comes back to the point Gary made a little earlier, if the curfew hours continue to reduce and we do see a opening of the tourism markets, Chris, I think it can be a phenomenal year. I think that a lot, you know, and this is a little bit of a side point. The economy has really shrunk, and we all understand why and how we got here and that sort of thing. But the concern that I have is that I see a lot of small businesses investing their shareholder, their equity is being basically eroded, and they're having to reinvest equity into their business to keep it afloat. And when you start burning equity in a business, it's always a challenge. And when I look at what's happening and the prolonged nature of this pandemic, the concern I have is what kind of recovery can we expect in Jamaica? You know, is it a very gentle recovery, or can we design it that it be a bit more aggressive? I'm not sure what goes into play with things like that, but I do feel that we've got to start looking at this thing a little bit more in terms of the economic impact that we're feeling. Am I optimistic that we're going to have a good year? Absolutely. I think that we can have a fantastic year. Are there wild cards in the deck? Absolutely. We don't know what this pandemic is going to play out. We don't know how things are going to play through summer with this and the tourism season and stuff like that. So we feel really blessed at Jamaica Broilers to be in the position. I think the Lord has seen us through a very, very unique time. He's given us hope, which is one of the things that he says he brings to the table, is hope. And he has just given us a real vision for the future, and we're excited about it. And we just honor him every time we can get the opportunity to, you know. So we credit a lot of where we are to just God's hand guidance. No kidding.
Thanks for that, Chris.
Well, just talking numbers, what we're talking about is like, on the government side, they're predicting maybe 4% recovery this year overall. The multilaterals, the foreign guys, they're saying, you know, if we're lucky, we'll do 1.5%. So those are the real numbers. And based on what you're seeing from where you're sitting, are you thinking Jamaica Broilers is going to be above the government numbers, or closer to the multilateral international guys with all the PhDs, what those guys are saying? What did you think, Chris?
I think, honestly, I think, and this might be a little, I think it's going, look here, the Jamaica segment of our organization is going to go the way of the economy. The economy grows, the economy develops, the Jamaica segment is going to grow and develop. What number? I think, Chris, I think we'll definitely do better as a nation. I think we'll do better than 1.5. I think 4 is extremely optimistic. You know, we're halfway through the year. I know the calendar year, but I think 4 is a little optimistic. We'd have to be very aggressive on our decision making. But I do feel, in terms of the U.S. segment, the growth opportunities there are greater than 1%, and I think I'm looking for a strong year out of the U.S.
Right, Chris, if I'm not mistaken, I mean...
To just make one final little...
Sure, Chairman.
Chris, is that I'm not really pressing you. The reason... asking that question is that, you know, we do have choices about how we manage our economy after a downturn. And the truth is that Jamaica Broilers, being one of the bigger companies and being a producer companies, you're not just speculating about what the takeoff is. You actually can see it coming out of the warehouse. So I think, we really appreciate you coming out and giving us what you're seeing, because I think, forever the leaders on the financial side of the BOJ and the MOF, they can hear what you're saying and get a take of what the real story is, because reality is always better than speculation.
Absolutely. I do feel, Chris, just as it's a broader discussion now, I do feel that it's going to be, I feel our decision making at what I'd call a leadership level and needs to be a little bit more aggressive as it relates to our economic recovery. The challenge that we face is we can get in front of ourselves and we won't get out of our own way at times. And I'm concerned that if we're slow, we're going to miss the boat a little bit, as from Jamaica's perspective. The wonderful advantage that we have, that Jamaica has, is that we're small, so we can be agile. And we have a great brand, and we have a great product, tourism product, and people love to come to Jamaica. And I think that we need to capitalize on that. And some of those things will move this economy. It will snap back quick. That's a potential that's sitting there for this economy. But it does take some strong decision making, which I think the government is capable of. So.
Well, thanks, Chairman Berry. Thanks, Chris Levy. Listen, from my perspective as an analyst, bringing it back to broilers, I do want to point out that I think the worst is behind us. I think we can all agree on that. That your 2% growth in sales was net of 4% reduction in Jamaica. So we've just gone through the worst pandemic ever, and sales for broilers fell off by 4% in Jamaica, grew by 9% in the U.S., by the way, and we see how the U.S. is becoming a bigger part of his revenue base. So I think the worst is behind us, and I'm looking to see sales pick up back in Jamaica over the next year. So I'm certainly thinking you had a great last 9 months, and the next year is going to be even bigger for broilers. So congrats again, Chris Levy, for the great job you did.
Thank you very much.
Okay, folks, moving on to our winners for this week's Instagram giveaway, courtesy of Jamaica Broilers Group. I'd like to give shout out to 3 persons: Aisha Chanel, Patrick Morris, and Manish the Food Blogger. These are some interesting names. Congratulations, guys. Okay, moving along in the segments, we're going to move over to our top stock picks. Great. This week, I believe I'm recommending Grace Kennedy, if my memory serves me well. So it's another stellar performing company. It kind of reminds me of Jamaica Broilers, but the big brothers, so to speak, given that they are a slightly larger company with a market cap of $87 billion. The share price today at about $88, which is at a PE of 13 times. And if you recall earlier, I said for the main market, I like them at about 16 times. So I think Grace is still undervalued by about 20 to 30%. And we're going to see this stock over the next year tipping $100 over the next year for sure. They are growing from strength to strength. Moving to the next slide. You'll see why I'm saying they're growing from strength to strength. It's a similar story to broilers, where sales have grown, in this case, by 9%. They've been able to reduce operating costs, and then that has translated into substantial growth in the profits, where we see that the profit attributable to shareholders has grown by 26%. Yes, it's very impressive when you consider the size of the business. And this is just for the March quarter, by the way, quarter over quarter. So we're talking about $31 billion in sales. It means their annual sales are now tipping $100 billion and $1.6 billion in profitability for the quarter. So they're doing a great job. And if you look at the quarterly performance, on the next slide, you'll see the kind of trend that I like to see. In the last 4 quarters, you can see how they've gotten into the $1.4 billion per quarter or higher level of performance, this last quarter being 1.65 billion. I want you to appreciate in the prior 8 quarters, they struggled to get past $1 billion. Only once really blasting it, but they averaged about $1 billion of profitability per quarter in the last 8 quarters. In these most recent 4 quarters, they're now averaging $1.6 billion. That's substantial growth. I personally think that growth trend is going to continue, and this is why we love this stock. We mentioned it in January with $60, and for those of you who jumped on the boat when we mentioned it when it was at 60, now it's at 88. You've seen, over a 30% increase. I'm telling you, in the next year, the stock has more legs to continue growing. Gary, I don't know how you feel about my pick. It's my pick, but do you have any comments about GK?
I agree with you. I think GK is one of the biggest underpriced stock in the market. If you look at a company like Derrimont that's trading at a PE of 34 times, even after they've gotten capital and their nominal profit has increased, but the effective return to the original shareholder is less. So you're looking at 34 times for them, and Grace Kennedy is at 14. So if a Grace Kennedy trades at 20 times, you're looking at $120, which is about 50% above where we are. And I don't think you have seen what the real potential of Grace is as yet. Because remember, we're still in COVID. And I think as a diversified conglomerate, especially with some of the acquisitions that they've done, I expect once we start to emerge from COVID, I wouldn't be surprised if the profit generation of Grace accelerates further. So I like the stock. I think you have a lot of upside still left in it.
Yeah, great points. We saw where they closed the deal with Scotia recently, where they got a lot of cash, $7-8 billion cash. They're obviously up to something. You're going to see that company expanding. Chairman Berry, any thoughts from you?
Well, we got in sub 60. We're very happy. And, I think, one of the big challenges in picking stocks in Jamaica is really trying to find a stock which can grow globally, not just in Jamaica. Speaking with Chris Levy earlier on, Chris is saying, hey, we've cracked the code in the US and we're growing. It's 34%, 30 whatever percent of its profits, and it's going to be growing bigger. And I think, I may be wrong on this, but I think that Don Webby, he cracked the code. And so if you want to be in that boy, get in there now.
I totally agree. My average price, personally speaking, is $54. I'm in love with the stock, and I really think it's going to go places. You're going to see.
But if I may, Dan, sorry to interrupt.
Sure, man.
Our colleague Dennis Chung made a Facebook post recently saying that these larger companies are recording these record profits, and it's true. It's a huge transfer of wealth from the poor to these larger companies. But what a lot of people are missing, the majority of these companies that are doing well, including Jamaica Broilers, whilst you have great personalities like Chris and his dad Robert, great guys, the fact of the matter is that a significant portion of these companies are owned by pension funds. And one of the things that Mayberry has been saying for many years, and we're here every day to show this, when we started MJE started with the equivalent of 10 million US. And 10 years later, it's worth over 100 million US. So my question and my plea to all our listeners here today and the Jamaicans in total, if you can't figure it out, just buy stocks on the Jamaican Stock Exchange, right? So even these companies are very good at getting increased profits, and you don't know how the hell they're doing it, buy shares in these companies. Because you could just be like Mayberry Jamaican Equities. 10 million US in 2006, 120 million US in 2021, right? And you don't have to be an expert. If you don't know how to do it, just buy shares in MJE. But at the end of the day, guys, owning part of a company like a Jamaica Broilers run by a CEO like Chris Levy will create generational wealth, right? And there are many other companies. You're speaking about Grace Kennedy now with a wonderful CEO like Don Webby that's creating generational wealth, right? Buy shares in these companies and you will do wonders for your grandkids.
I totally agree. I've certainly experienced the fruit of it over the last 7 years. It's been phenomenal. It's been a great run. Meeting you and Chris, Gary and Chris has changed my life forever. Moving on to our next segment, we'd like to look at our gainers and decliners, starting with the decliners first. First we have Portland, followed by Trans-Jamaica Highway, surprise, surprise, 138 Student Living, Key Insurance, and lastly, Cab Brokers. And then moving on to our top gainers for the week, we have SSLVC, Purity, Sterling Investments Limited, SCI USD, Everything Fresh. Great, moving on to our next segment where we get to hear from the foreign exchange guru. We'd like to talk about the FX and the trends. And as usual, we start with the first slide, which shows the devaluation rate over the last 4 years. I keep saying it every week. The dollar, on average, over the last 4 years has devalued by about 2.7% per annum. And it hasn't been a straight line, of course. When you see the next graph, you can see that it's been up and down with peaks and troughs. And in the last 6 months in particular, we've seen a low of 142.65 and a high of $155 approximately. And today, having started the year on the next slide at 145.86, we can 142.65. I beg your pardon. You can see we're now at 150.62. So the dollar's backed off a little bit from the high of about 155. So that's good to know. Still 5%. Year-to-date devaluation, so I'm still a little bit concerned there. The question is, where do we think it's going for the rest of the year? And this is obviously going to be a year, in my opinion, where we have a higher than normal average rate of devaluation. Chairman, what do you think? What do you have to say about the future and FX for the rest of this year? Chairman Berry?
Barry, you're on mute. He's on mute.
Oh, sorry about that, guys. On the muting button there. So as far as the long predictions, Dan, that's not my game on the FX. I think right now the JMD is appreciating. I'm still betting on it going higher, the JMD versus the US. So it's still a good time to buy. You know, if you have needs going forward for the rest of the year, now is a good time to get in. I'm for the JMD appreciating.
Okay, and Gary, what about you? Any additional thoughts?
Yeah, you know, your graph says it all, Dan. If you look at the graph, the peaks and the trough.
Yep.
Even though you have the peaks and the trough, at the end of the year, there is a declining trend. Or there you go. If you're to draw a line from that 135 up to where we are, you're seeing on average a devaluation every year. And where we are now, we're coming off a recent high of around 155, 156. We're about 150, we're about to go below 150. And I think you're going to see basing somewhere around the 147, 148 region. And then it probably trends higher. And the only thing I'll add to this is that, you know, I'm watching very closely the inflation data in the US, because if the US starts to move interest rates, everybody else is going to have to move accordingly. And then that's when you're going to have a change in the FX dynamics. But right now, we're seeing the revaluation from around 154, 155 down to 150. Again, I figure it will trade bounce around, you know, a $2 range between 150, 158. Well, sorry, 150, 148 before it starts to move again. There's some maturing, there's some big J-dollar securities that are maturing, which might put liquidity in the marketplace, which might slow that pace of revaluation. But let's see what happens over the next week.
I appreciate that. Good observations. And I personally am watching the commodity prices because I've just heard so many of our large CEOs talking about increases in commodity prices, whether it's corn or soy that Chris was mentioning, or just food prices in general when we talk to some of our other folks. I'm definitely nervous about that. Certainly over the next 3 to 4 months, it looks like we're going to have some increases in commodity prices, which may put some pressure on the exchange rate. Last week, Chairman mentioned oil as an example. So thanks for your insights, gentlemen. I really appreciate it. I think that brings us pretty much to the end of this segment. And so we're going to move on. Once again, I'd like to thank all of our viewers for being a part of this weekly Investor Forum. I'd like to give a special thanks to our special guest, Mr. Christopher Levy from Jamaica Broilers, for participating in today's investor briefing, and to Chairman Berry and CEO Gary Peard for their contributions. We're certainly looking forward to having yet another insightful discussion in the upcoming week when we'll be featuring Kevin O'Brien Chang, Director of Fantana. Be sure to follow us on social media and to stay up to date with our live streams. And don't forget to subscribe to our YouTube channel at Mayberry Investments Limited. It's a great program today. Thank you guys for tuning in. We look forward to seeing you next week. Please keep safe, and remember, wise investors, slow and steady wins the race. Goodbye.